commodities space as well. Oil trading close to $44 a barrel overnight as markets begin to price in a Hillary Clinton win in the presidential race. But gains in oil futures were capped by rising greenback and doubts over OPEC's commitment to planned production cuts. Well, joining us now is Tim Evans from Longleaf Trading Group, live from the CME in Chicago. Tim, great to see you there. Now, we were just talking with Bob Iocchino prior to coming to you, and I asked the question about whether the election is sort of playing into the moves that we're seeing in oil at the moment. Bob doesn't think it is. He thinks that the move in oil has nothing to do with the election at the moment. Would you agree?
In the bigger picture, no. In today's price action, absolutely. You know, I mean, we opened up last night. We had gap open higher in energy markets and equity markets and a variety of other markets, expressing kind of a risk-on sentiment given the most recent developments with the FBI and Hillary Clinton. However, the larger move that we're seeing to the downside here over the last couple of weeks, no. I mean, that's a reflection of the market discounting OPEC coming up with a production cut agreement. So, you know, I think today's price action is going to be pretty short-lived, actually.
Just speaking of the upcoming OPEC meeting, we're seeing the number of drilling rigs in the United States really surging there. So shale oil production and those suppliers seem to be creating a bit of a problem for OPEC coming into that November 30 meeting.
Yeah, I mean, no doubt about that. I mean, because OPEC kind of created this problem for themselves. You know, I mean, they, you know, through the announcement of this production cut, you know, prices got a pretty good lift. We went to $52, $53 a barrel. What that allowed U.S. producers to do is come in and hedge future production. So it allowed U.S. producers to come in and, you know, theoretically add productivity to the market for, you know, upward to 2 years. So that productivity is going to be competing with OPEC, you know, for the foreseeable future. So, you know, they have a dilemma they're going to have to deal with at their November 30th meeting, and, you know, that is to, you know, not aid in prices going higher and further contributing to allowing U.S. producers to, you know, potentially take a, you know, a larger chunk of the market share.
Yeah, I guess U.S. producers thrown a bit of a lifeline when prices stabilised after the OPEC announcement.
I'm sorry, could you repeat that, please?
Just around the US producers, I mean, thrown a bit of a lifeline when prices stabilised after the OPEC announcement, I guess tying in with your comments there around the producers hedging and so forth.
Yeah, because, well, I mean, what you're right. I mean, what we were really seeing is, you know, a lot of skepticism in terms of how resilient U.S. producers were going to be as, you know, prices were spiraling lower and lower. Really, it happened so fast that it really didn't allow U.S. producers to continue to hedge and kind of shore up the ability to continue to produce over the next couple of years. That announcement, absolutely, it threw them the lifeline. It gave them the market prices that were needed to lock in prices that would allow them to operate profitably, you know, over the next year to 2 years, depending on, you know, the duration and the specifics of their respective hedging programs.
All right, let's talk the broader market there today. I mean, so much volatility isn't there, but we certainly have seen quite a sharp move lower in that VIX index today. That's certainly been one of the talking points this morning, but really kicking off the new week on a high note. What have you made of some of the moves in the session today?
Well, you know, we see the VIX down. Yeah, it was down as much as 20% at one point. It's been kind of oscillating down 15, 18%. So, I mean, we've seen the levels of volatility obviously decline sharply. I mean, you know, I was noticing, you know, the number of derivative contracts that have been trading in the market upward through Friday's close, and we are seeing a significant pickup in derivative activity and equity options and futures. You know, and that's more or less just a reflection of the uncertainty that was building in the market given, you know, Donald Trump's kind of changing fortunes, at least with the polling. You know, that all changed last night, and the market seems to be coming to a consensus that we're going to see the type of government that's favored by markets, and that's divided government and status quo government. The polls are kind of supporting those ideas now, and you know, which explains the kind of market activity we've been seeing here beginning last night up to this point.
What about the sectoral moves that we're watching? I mean, healthcare stocks, the financials, Goldman Sachs, all rallying pretty significantly on this announcement last night that the FBI has cleared Hillary Clinton of this email scandal. What are you making of those moves in the various sectors?
Well, I think really those moves that we're seeing, I mean, we're seeing in United Healthcare, we're seeing in Goldman Sachs. I mean, really what we're seeing are moves of companies that have benefited kind of from the status quo that we currently have. As the polls were kind of showing that Donald Trump may, in fact, have a much better, chance of getting elected, a lot of those companies that benefit from the status quo, they've come under pressure. But, we saw a big relief rally in all those markets because the market, I think, is now, again, coming to consensus that status quo government is what we're going to be seeing following tomorrow's elections.
Yeah, well, and things, as we know, are still so tight with those polls there. I mean, Hillary Clinton only just slightly ahead of Donald Trump at the moment. But, it is such a line ball call. It could go either way at the moment. Are you expecting more volatility after the election and on a Trump victory? Do you think we could potentially see a big sell-off in equities?
Yeah, well, I mean, I think with a Donald Trump victory, I mean, clearly the market is going to have to completely reprice what it was expecting to see going into Election Day. Obviously the 45 points or so we just picked up today in the S&P, you can pretty much kiss that move goodbye and then some. If Donald Trump wins, I mean, I think you can pretty much say look out to the downside. The question is if Hillary Clinton wins, are we going to see a continuation rally from there? History is a bit mixed in terms of how the market responds following an election. My personal view is upon Hillary Clinton getting elected, really what we're going to start looking at again is the underlying fundamentals of the market. And that data has been relatively mixed. So I think it'll be kind of a data-driven environment from there. And obviously, we'll be looking to see what the Fed's going to be doing in the month of December.
Yeah, exactly.
Getting back to, some of the things we've been looking at before.
Yeah, that's exactly right. I was going to bring up the Fed.
All this election hysteria.
Yeah, you mentioned the Federal Reserve there, and I think their December move, I mean, that's going to be the next focus for markets, isn't it? I mean, the Fed keeps saying that they don't want to be seen to be taking any sort of political side, but no doubt they are reading the tea leaves and watching very closely with what is happening here. I mean, do you think the outcome of the election could change anything for the Federal Reserve and a potential move in December?
Yeah, absolutely. I mean, the Feds, when it's taking an action that can create kind of market upheaval, they prefer obviously to kind of deal with a market that's stable. If we're Donald Trump's elected and then we're seeing excessive levels of market volatility and excessive levels of uncertainty, kind of filtering in a variety of different markets, domestically as well as internationally, it makes it a much more difficult environment for the Fed to come in and begin or continue raising rates. So I think a Donald Trump victory makes the Fed's job much harder in December. And, on the other side, a Hillary Clinton victory, along with the Republicans carrying Congress, will make the Fed's job a lot easier. If, in fact, they want to raise in December, which I do think they will.
All right, fantastic. Tim, we might wrap it up there, but it's been great talking to you. Thank you.
Thanks, Leanne. Have a great day.
Tim Evans joining us there from the CME in Chicago. Time for a break.